Hey fam, this is Dan. Wanted to talk to you about my approach to financial independence. So the traditional FIRE movement, which stands for Financial Independence Retired Early, is not going to work for me. I like the FI part, but not the retired early part. I want to be independent and to have my time freed up to do what I want, but it doesn't mean that I stop being a productive member of society. And from what I gathered, from what I see from the FIRE movement, it feels like they are retiring poor. And when I say this, I don't mean any disrespect. What I'm seeing is that these people have large sums of assets, some in the millions, and that asset is growing, appreciating, and allowing them to withdraw from it so that they can live independently. And that amount to me seems not enough. I wouldn't be able to live comfortably with that. So I don't like that. It doesn't feel, it's independent, but also doesn't give me the feeling of being free. I want to be able to eat what I want, travel what I want, have money to invest. I also have 2 children that I want to provide for. And I also want to have money to give away to charity, to help the poor, to help the needy or the hungry. So I want financial independence that is able to fund my lifestyle plus some. So the gist of the traditional FIRE movement is to have assets that appreciate more than the withdrawal rate that will fund your lifestyle. You start with determining your number, which is basically your expenses, specifically your annual expenses. How much do you need to live on by? And then you need to have a certain amount of assets that's going to appreciate and grow and allowing you to withdraw that a certain percentage a year that will cover your number or your expenses. And if you do this right, even though you withdraw from it annually, your principal would never go under. And then you can also use real estate too. That's a good way of generating income. But again, this won't work for me in 2025 because the price of assets have gone up dramatically, especially real estate. Combine it with higher rates, real estate, investing, rental properties, the math is not going to work there. You're not going to be able to get that return. You're not going to be positive cash flowing with a 6%, 7% mortgage. And for S&P 500 or dividend stocks, even the aristocrats and the kings, they do about 3% a year. S&P 500 has done well, especially well in the past few years. It's actually doing about 20% in the past few years. But at this point, I really need something that can outperform that. So here's my approach. And as you can see, it's non-traditional. It's based on current development in investments. And it starts with saving in Bitcoin. A lot of you have heard about Bitcoin. I'm a believer in it. And to me, Bitcoin is the perfect saving asset. And then investing in Strategy, which is a company that hoards or buys Bitcoin. Thirdly, selling options for income. It is highly profitable and consistent. And then trading using bots. That's simple. The bot does all the work. And if you do it right, it can generate for you a positive expected value, which is profits. Yields can come from dividend stocks and from DeFi. And then sharing knowledge, just because we live in a knowledge economy where you are able to monetize from sharing your knowledge. So why save in Bitcoin? And it just comes down to the fact that it is the best performing asset since inception, since the past 10 years or so. Look at the chart. I mean, it just continues to go up, albeit in cycles, but nonetheless, it's upward only. There's a finite supply. There's 21 million coins, but the reason why I'm saying less is because in the end, there's going to be less than 21 coins because due to hacks, due to people losing their keys, due to people holding it, now that we have the Bitcoin ETF, those are just holding it forever. MicroStrategy or strategies buying it and holding it. So all of those supplies are being removed. Again, it just becomes more scarcer to be a whole coiner. Look at the population of the US. It's over 300 million and there's only 21 million Bitcoins. Bitcoin's pretty much up only while fiat is down only. You know, it's very scary at this point, in my opinion, to be holding and saving on to US dollars because its buying power has done nothing but gone down forever. And Bitcoin has been going up forever. So if you want to save money, Bitcoin is the perfect asset to do it in. Bitcoin is global and it's digital. Both of these have benefits. Global, right? You can own this anywhere. Digital, many benefits there. You can take it with you anywhere. It's an easier asset to hold. You don't have to physically hold it. You don't have to worry about tenants. So digital is always better. And lastly, there's still a lot of upside. So if you think 84,000 is high, I'm telling you it's not. When you compare Bitcoin being a global asset, comparing it to other global assets, it's very small. Right now, Bitcoin hovers about $1.5 to $2 trillion. Compare that to other global assets. Equities is over 100 trillion. Real estate is 300 trillion. The bond market is 300 trillion. If anything, I'm fairly confident that Bitcoin will be able to surpass gold's market cap of 16 trillion. And then invest in MicroStrategy. And the strategy is strategy. So this used to be called MicroStrategy. They rebranded to Strategy now. It's the largest corporation holder of Bitcoin. The founder and former CEO, he's now the chairman, is Michael Saylor. He's been in the tech space for forever. And he pretty much in the beginning didn't believe in Bitcoin, but recently he's changed his mind and now he is non-stop accumulating it personally and through his company Strategy. And when I say this statement, if you know this, you know this. Saylor is to Bitcoin what Rockefeller was to oil. If you know what Rockefeller did to oil, you will understand what Saylor is doing to Bitcoin. Please know, if you don't know, that Rockefeller built Standard Oil, which is pretty much the largest oil company ever. It got so big that had to be broken up to companies like Chevron. What's the other company? Sorry, can't think of the top of my head, but all the pretty much the big oil companies was all originally from Standard Oil. So if you know how big that was, imagine that being done now with Saylor and Bitcoin. Strategy is 2x the volatility of Bitcoin. So if Bitcoin goes up 5%, strategy should go up 10%. Saylor likes to say volatility is vitality. And that's great for the stock owners, especially for the options. Strategy right now is about $80 billion in market cap while holding about $40 billion in Bitcoin. And if Bitcoin continues to go up, you can only imply that the market cap of strategy will continue to go up. And even at an $80 billion market cap, strategy is not in the S&P 500 yet. Wink, wink. So that's going to be a huge catalyst when that happens. Strategy trades on the same level as the Max 7, but is not in the same class as them yet, which is the S&P 500. So when that happens, that's going to be a huge development. And just like how Bitcoin is the best performing asset, strategy is the best performing stock. Now, onto selling options. This is something that I've been doing since 2020. Has worked well for me. It's a great way to generate income consistently because it is high probability. You sell cash secured puts or cover calls. Even if you target conservatively, like 1% a month, that's still 12% a year, which is the normal performance of the S&P 500. Now if you turn the knob up a little to 2% a month, now you're outperforming the S&P 500 easily. So that's going to be 24% a year. Now, if you target 1% a week, that's going to be more than 50% a year. And it's high probability because you know the odds before entering, right? In options, we have Greeks or stats called delta, gamma. The delta will tell you the probability. So if you have the probability, you can engage in the ones that are high probability. And it is consistent because if you're selling options that expires weekly or monthly, you know when you're going to collect your premium. And if you've been following me, you know that I have a whole course on selling options for income. Next is bot trading. This is a new endeavor that I've stumbled upon, and I've been running it, testing it, and now doing it with real money. And it just makes sense to me to do it. What I'm doing is trading on probabilities. I'm trading on positive expected value. If you do that, following the rule of large number, in the end, you should be able to profit. The bot does all the trading. I'm just tinkering with the parameters, the formula. The bot takes care of all the execution, the entering, the exiting. So it can be very passive. And bot trading just makes sense because it is passive and is profitable because we're following the rule of positive expected value. If you have a positive expected value, that means that you're expecting to profit, and it's basically just math. And what I'm doing is really just trusting the math, taking trades that have a good R&R, risk and reward, has a good probability of max profit. If I take those enough, the wins from that should be able to eke out a profit after factoring the losses. So what I like to say is the math is mathing. And from what I'm seeing so far, it can do over 100% a year. I know it sounds crazy, and I'm still in disbelief and skeptical of it, but so far the math is mathing, and I'm just going with it until things change. I will update you guys on this. I will share this bot with you all. Okay, so yields is basically holding assets that will generate us a yield, and that can come in the form of dividend paying stocks or using DeFi or decentralized finance thanks to crypto. And I'm demanding at least around 10% a year. Traditional dividend stocks, the aristocrats, the kings, do about 3% a year. And to me, that's not enough. That's just not enough. I'm not like, I wouldn't even care for 3% a year, to be honest. I don't see how you can justify that when the S&P 500 can give you 12% a year. So dividend stocks, if you're doing it for 3% a year, that just doesn't make sense to me. Unless you can bottom pick it, get that 3% a year or higher yield when the price drops, plus the appreciation, then it'll make sense. So I would be interested in that. But again, it needs to come out to be at least 10% a year. Right now, what I'm interested in is IIPR, which is a REIT that works in the cannabis sector. STRK and STRF, those both are preferred stock from Strategy, and these right now are giving about around a 10% yield. For crypto, I'm staking Ethereum and Solana, and I'm looking into other DeFi ventures. I'm still researching into that, but at this point, DeFi has matured, and I feel more comfortable now putting money into there if it can give me at least 10% a year. The good thing about Ethereum and Solana, so Ethereum is the staking yield is about 2.5%. Solana is about 6.7%. The interesting thing about this staking is that the yield is not in cash, but is in coins. So if we do this right later when Ethereum and Solana are at higher prices, then it would make sense. So Ethereum staking, again, 2.5%. That's lower. You would think, hey, that's low. Okay, but later if Ethereum is at $10,000 per Ethereum, that 2%, that 2.5% you're getting in Ethereum coins would be like 20 to 25,000, right? So that's interesting thing about getting yields from crypto, that the yields are in coins, not in the cash amount. So if later, when the price of Ethereum and Solana are higher, that's when it goes above that 10% a year threshold. And then lastly, sharing knowledge. We live nowadays, thanks to social media, in a knowledge economy. So this is about sharing my experience, my knowledge as I go, sharing with you my strategies, my wins, including my losses, my mistakes, and resources. And also, again, since this is an economy, we're able to monetize that with content creation, with revenue sharing. And this trend, in my opinion, will just continue. It's not going to stop. Again, with social media today, you are incentivized to basically share. People are gobbling up content. YouTube, TikTok, people are just hungry for content. The market, the appetite is there. So, plus the fact that you can be rewarded monetarily by it, you should do it, right? I'm just getting started on this journey. And yeah, so that's my approach to financial independence. I'll update you guys on it, on the process. So let me know what you think.